we definitely get businesses, public and private, that were like, these are absolutely just scams or fraudulent, or invest in like the CEO's son's business or whatever. There's so many things like that.
Do you just like send like a perfunctory, like, unfortunately, we can't cover you? Or are you like, sir, sit down, look at yourself in the mirror. Life is long. Don't ruin your reputation and the lives of others because daddy feels guilty for not being around more when your son was younger. Like, I don't know, whatever it is. Hello, everyone. GM. Welcome back to another episode of Overpriced JPEGs. It is a in-person live episode, not live, in-person, live for us, which are my favorite episodes. And this one is extra special because I'm joined by my good friend, Sophia Zaller. Sophia, thank you so much for joining us.
Thank you for having me. I'm thrilled to be here.
I'm so excited. So Sophia is a crypto insurer underwriter. Is that the proper way to?
Underwriter.
You're an underwriter at a crypto insurance company. Crypto insurance company?
Yeah, we're a crypto insurance carrier.
Okay, we're going to talk about what that means. So Sophia works for Relm, which is a startup and filling a much needed gap in the space, which is that traditional insurers do not want to insure crypto companies because they're like, we do not want to touch that with a 10-foot pole. How the hell do we determine risk in this space? Everything seems risky to us. So we are not about to put that risk on our balance sheets if we don't even understand it as like traders, let alone like insurers. Does that kind of summarize the state of play in the traditional insurance world?
Yeah, absolutely. Our CEO, Johson, he spent over a decade in the insurance industry, and just seeing I think he really saw a dislocation between the need for insurance capacity when there's tons of companies that are well-positioned, well-run businesses, and traditional insurers, if they don't have an actuarial table with 10 years of loss history that's going to allow them to price that risk, they're not getting near it. So that's what Relm was kind of launched to do. We serve risks across the blockchain, Web3, digital asset ecosystem, and we've been doing it for 3 years.
Amazing. And you were one of the very first employees there, I know.
I was the fifth employee in July 2021.
Okay. And you've underwritten like 300 plus policies, I'm pretty sure, in this time. So you've seen like the insides of the industry from a very particular vantage point.
The highest level, and then getting into the granular details of each one of these accounts were on basically all of the prominent players across the crypto ecosystem.
So that's like NFTs.
Yep. Publicly traded mining companies, wallets, exchanges, different types of like production studios, even businesses that are like crypto adjacent, like crypto data aggregators. Like traditional insurance still won't even touch them because they're like, oh, like I see crypto, this could be a headline risk for us, like declined. Okay. So we're like willing to we like really believe in the space, and we're willing to like get down to that level to understand.
Where no other insurer will go.
The new frontier.
Love it. Okay, we're gonna dive into all that. I have intentionally, I'm kind of stupid when it comes to insurance, but I know it's not like fundamentally that complicated.
It's just a whole different world, but it's there's a lot to learn, but we'll get into it.
We're gonna dive into it. We're gonna dive into what you do, how you do it, why it's important, what companies, brands, other projects out there should be thinking about if they haven't gotten insurance. But before we dive into all that, I do have to say two things, which is first, if you're listening to this on YouTube, if you please subscribe. If you're listening to this on the podcast app, Apple Podcasts, Spotify, you know the drill. Please rate and review. It is so great for the show. And before we continue and dive into all this good stuff, we do need to hear a word from our lovely, lovely sponsors.
When it comes to NFTs, convenience often wins over security, despite scams being everywhere. Brands and artists have no other choice by complying with big marketplace terms and weak security because no good alternative exists, which is what prompted Ledger to fix the problems of NFTs themselves and launch Ledger Market. The Ledger Market provides an end-to-end secure NFT experience for brands, artists, and users, enabling true ownership and control over NFT assets, from minting to storing. Ledger Market secures NFT projects via Ledger Enterprise, keeping you protected from phishing attacks and scams. And the market directs users to Ledger Live, where they can transact with a contract directly, giving clear signing details instead of blind signing and praying. Don't trust, verify with clear signing from Ledger Market. Stay up to date on the latest drops and marketplace updates by following Ledger on Twitter and joining the Ledger Open Discord, which is linked in the show notes below. BUENO is the NFT toolkit you need to launch your digital collectible on the blockchain without coding. Every step of the NFT creation process, from generation to mint, all taken care of by the BUENO NFT toolkit. With BUENO, you can load up your art layers, reorder the layers, tinker with rarity, everything you need to make your NFT project a reality. BUENO even allows you to mint your tokens on the blockchain with zero code and offers advanced minting logic like linking allow lists, airdropping tokens, and on-chain royalty configuration. As a part of their launchpad, you'll get access to forums to run surveys, email collection, and build your pre-sale list to make sure you are hooked into your own community. BUENO is full of powerful tools you need to build the most expressive NFT project possible. So go to bueno.art and start building your own collections today.
Okay, so you joined the company a little over a year ago, and just like at the most basic level, what are the things that NFT companies, crypto companies should be getting insurance for or need insurance for?
Yeah, so we typically see companies come to us for insurance working through our global network of broking partners. Typically, like the impetus to get insurance is either when you're trying to bring on like a credible independent director or raise capital or even sign contracts, like you just need insurance. Any business, whether you're a widget manufacturer or an NFT marketplace, like they need some level of that just like on a business level. It's like compulsory.
So I have an LLC now, and I do, and it's sort of
Carly
growing,
LLC.
Yes, it's not called that, but it's called Overpriced LLC. And it's growing. I have no insurance. Should I have insurance for something?
If you're taking outside capital, that's like typically, again, the impetus, or if you wanted to hire an outside director, like that's typically like people will ask and say, I'm not joining the board of your company until I know that you have insurance.
That's the big piece is like for board members. And so with that kind of insurance, it's called DNO insurance. Is that what that
directors and officers insurance. Yeah.
Okay. DNO. And so that's so that these board of directors can't be held liable if somebody sues the company. Like, what is that protect?
There's different levels, but like side A, B, and C coverage. But essentially, it's like if there's a claim from a customer, a stakeholder, an investor, like that there's been some kind of managerial decision-making that resulted in adverse harm to the company, whether financial or reputational damage, that's like, if there's no DNO insurance and the company gets sued or individual directors are named in the suit, like directors can be held liable themselves, like with their personal assets on the line for, any one of these claims. And it's like, you don't need to do something malicious or like actively intentionally wrong in order to be sued. Like if you make a mistake, or even if somebody just feels that there's alleged harm to them, they can just sue you, and then you're on the hook for like the defense costs, the legal fees, the time commitment in order to work through that.
Yeah. So before Relm, like what crypto companies exist? Coinbase has been around since 2016. I'm sure they have had boards of directors throughout that time. Like, what did these companies do? The directors were just like, we get this is the Wild West. We're willing to take this risk.
Some of that, and sometimes like traditional insurers will write at Relm, we call it the exclusions only package when we see that. And it's just like you can buy a business insurance package, but it will have a crypto exclusion. So I can't speak to Coinbase directly, but maybe they had business insurance that was like, oh, we'll cover you as a board director, but for no activities related to crypto. And then it's like, okay, that's like not really even worth the paper that it's written on.
I was going to say, what is being protected if you're Coinbase?
Exactly.
But so these directors, is your impression that they were sort of making the decision that like they're willing to take the risk again because they understand they're in a frontier territory and they're sort of making a bet on the space and willing to kind of be a little bit more risk on as a director than somebody in like a traditional world would have been?
I think so, for sure. Like we're definitely seeing obviously people excited to be at these companies. And a lot of times it's like you maybe wouldn't even think if you were asked to be on a board, you might just be like, oh yes, absolutely, without being like, do you have DNO insurance? I mean, also there's other types of insurance policies that have been around in this space. So we touched on DNO, which is to protect the directors of the company, but there's crime and like cold storage insurance. Like I know Coinbase was one of the pioneers in putting together a syndicate of like cold storage coverage, before Relm even existed, but where it's like they are, like the value of those assets are protected, like if there was some kind of hack or breach. But with cold storage, it's like you're locked up. So
this is a whole other area that I want to get into. So insurance for like, can individual NFT projects, for example, insure themselves against smart contract failures, against hacks, bots, like all of the things that we see go wrong with NFT projects all the time, and all the ways that, frankly, retail investors get screwed. and right now it feels like the good projects, depending on what the problem was, like will just reimburse or in some way make right their holders. But it's like feels like a very janky way to go about like a professional business that's like growing multi-billion-dollar industry. Like is that something that you guys cover for NFT projects? Is that an area you see the world of NFTs moving into?
Yeah, absolutely. I mean, all of those things you kind of mentioned are like different insurance
Categories.
Products. Yeah. So like the D&O insurance for an NFT project, it's like, did the Ds and Os make accurate representations if they say, we're going to, buy our NFT and you're going to get this utility, or like it's going to rise in value, which is a whole other thing related to like the evolving view of regulators of should these even be registered as securities? Like that's a huge aspect within the insurance industry and a big reason why these traditional insurers won't touch it.
Oh, wait. So say more on that. So you're basically saying for like, will directors be held liable if somebody in the company implies that the value is going to go up? And does that become a misrepresentation if it doesn't? Or is that something where like the security, the SEC is going to come after them and then the directors and officers are going to be in trouble because they're overseeing a company that issues unregistered securities?
Exactly.
Is that effectively the concern?
That's another huge concern. And it's like we saw with OpenSea, insider trading of NFTs on a platform. And that like that's not even like just like securities aspect that causes reputational damage to OpenSea. And if you're an investor in OpenSea, you might be, and again, like I can't speak to that client directly, but like, or like that person directly, but does that impact the value of your investment?
And so in theory, an investor could sue OpenSea
if they said like, because of this,
you've materially impacted my investment by being negligent and having employees who did X, Y, or Z. And so I'm now going to sue you. And so if you're, the director of that company, you want to make sure they have that D&O insurance to make sure that they're covered.
Exactly.
But going back to these kind of insurance around, like, is there a name for the kind of insurance, like in the way that you have the D&O insurance, or what's the category for protecting against like a smart contract failure?
So we have our own like proprietary smart contract failure policy that we like. So Relm does over half of our book is D&O insurance, but then we also do professional liability, which is we can touch on in a second, but smart contract, staking and slashing insurance for institutional staking providers, property coverage for mining operations. Like we have a lot of these crypto specific, very tailored insurance policies.
How much can you share about like how you go about assessing risk? Like if it's a smart contract thing, like do you have auditors that go and check out the smart contract to ensure that like, okay, we're not going to get screwed on this, or we're not going to have to pay out huge claims as far as we can tell? Like what's the process for something like that?
Well, so in smart contracts specifically, we'll look at technical audits from different third parties. We'll be reading, I mean, one of my top methods is to like look at the two different versions of audits, maybe one from 6 months ago and one from last month, and be like, what has changed and like what actions have the company taken in order to like remediate some of these issues that were identified 6 months ago? Like what's changed now, and like what's the plan for ongoing maintenance of these? But like with smart contracts, and staking and slashing, it's very driven by what protocol are you using? Like who are the developers? Are you working with a technical partner? And like, do they have their own insurance? Because that's another piece, is like all of these different like coverages will like intersect, and every time there's a contract being signed, it's like a transfer of that risk.
Mm-hmm.
So
let me give a specific example, because the project that comes to mind, which everybody who listens to the show with any regularity knows I absolutely love, so I'm not throwing them under the bus, but it just comes to mind, which is Akutars. And when you had the Akutar mint, and there was a problem in the smart contract, like it was like a counter problem, right? And so whatever it ended up being, I don't remember the number anymore, but it was like $30 million or something along those lines that ended up locked up in this smart contract. And it can't be unlocked, couldn't be dispersed to the people it was supposed to be dispersed to, couldn't be dispersed back to the project to use for what they needed. Is that something like, could they have come to you guys before the launch, said we're having this launch, we want coverage in case there's some sort of error in the smart contract to be paid out XYZ? Like, is that an example of somebody, a project who'd come to you and pay something monthly to be protected against what ended up happening?
Yeah, absolutely. I mean, we could cover smart contract separately. I mean, typically companies will come to us for professional liability insurance, which is like in the rendering of professional services. So like if, in minting, if something goes wrong, then you're covered for that. But like we don't cover smart contracts within that language. So it's like two separate policies.
Okay, walk me through. So let's do this like specifically. So if my Micah Johson, ex-MLB player turned artist, just multi-talented.
A Renaissance man.
And I know that we're doing this Akutar launch, or we're just hypothetically an NFT project that's going to launch. What would be your recommendation of like what we should be thinking about from an insurance perspective?
Yeah, great question. I mean, I think for sure D&O insurance primarily, because again, this is somebody that is a high profile individual putting his name and his brand behind this project, will probably want some assurance that he's not going to be personally on the hook if somebody, again, you don't have to make even a mistake to have somebody feel that or be able to allege wrongdoing and be able to bring a lawsuit against you.
And so the D&O would be worth it. Even let's say they haven't raised money, there's not like a board of directors, but Micah is an officer with that. So it still protects him as an employee and founder of a project. Okay. So that's a no-brainer. Like these individuals want to be protected from like some member of their community suing them for X, Y, or Z that may or may not have merit, right? But maybe it does and it wasn't because you were actually a bad person. And then the professional services, is that the other category you were sort of outlining there?
That's kind of the main category, and it's also called errors and omissions insurance. Okay. So you would think that a smart contract would be covered under that, and sometimes they are, but sometimes we would say that needs to be a separate policy. It really depends kind of up on the risk appetite of the insurer, us in this case. But it's like if you're minting an NFT drop and it's like something goes wrong during that, for example, the smart contract, I would definitely say professional liability and then probably smart contract. But if that, and I was the original mint on OpenSea, or was it like?
No, this is like a proprietary, so in that, on their own website.
So in that case, you would need smart contract
insurance separate.
And then we would as the underwriter, I would ask for, okay, what steps have you taken? Audits, who are you working with? Who has access to these? What's the ongoing plan for maintenance of these? And there's specific questions we ask about bridges and, different access points, et cetera.
And then what's typical in terms of what gets covered and how much a project, a person, whatever company is paying for this ongoing insurance?
Yeah, I mean, it's a hot commodity for sure. It definitely varies. I mean, in terms of the limits that we're able to offer, Relm we're a startup insurer. We are keeping our limits judiciously low everybody wants more limits.
As in low, as in we won't pay out more than $20 million because we need to protect ourselves to make sure we don't go bankrupt having to pay out some massive claim of $250 million or whatever.
Exactly. I mean, our average policy size is between 1.7 and $2 million. We can go up to 5 to 10 for certain projects. We are working with reinsurance partners because we are working towards raising that limit. But yeah, it really varies across the space, and for each different we're digging into these accounts and seeing what do their financials look like? What is the risk scenario here? How are they making money? And then separately, what are they saying to, especially investors, but also publicly? We'll look at their blogs, their social media, and say you said in your application that you were doing this one thing, or you had no plans to launch a token, and then now I see on your Medium article that you do have a token. So it's almost like being a detective and just assuming that you're always looking for reading between the lines, I guess.
Wow.
Yeah.
So a couple questions on that. Will you insure projects who have anonymous founders?
No. I mean, typically no. But we haven't really been asked that because people come to us for insurance when they're, again, raising capital, trying to bring on an outside director that doesn't want their reputation damaged. So if you're just
So typically you already aren't probably anonymous in that case.
Yeah.
What are some of the most egregious stories? You don't have to get into who they are, but where you had to turn somebody down because there was such a mismatch in how they were representing themselves or their company or their project, whatever it was, to you versus how they were portraying it publicly?
Yeah, I mean, we've definitely, we've seen some of the contagion unfold throughout the space. Mm-hmm. It really shows the value of diligent underwriting that we had declined some of the companies that ended up not being able to, remain solvent throughout this.
Can I name some and you blink twice if it's a company that you rejected?
I should text Joe and be am I allowed to name names?
Celsius. No, I won't make you do it. 3 Arrows Capital.
We definitely, when you look at the financials of these companies, it's just basic diligence and are they on a path to be able to pay their obligations.
So again, totally not specific for any companies. Like, can you break down for me what clearly looks wrong, where you're like looking at the financials and you're like, what, you're just way over leveraged. You've, invested a ton of money in high risk assets and you don't have nearly enough on your balance sheet to, hit your margin calls, or like what do you see that like is a huge red flag for you guys?
Great question. And in terms of huge red flags, like I'll have on one screen like the investor presentation, like what they're saying, like here's our projections and invest in our company. Like make your decision about giving us money on the basis of these representations, and then looking at their financials and being like, maybe everyone has dreams, but like, are you really going to make $50 million in the next 6 months? Or are you just saying that to get money during a bull market? And like, are these realistic? And also like, I think understanding like the disclosures that are being made to investors along the way. Like I would like to see a quarterly update that's being sent out, especially, I'm like, so like, do you have your Q2 quarterly update available? Like post kind of some of the contagion that we've seen, like trying to understand how they're communicating to investors, and also just like a breakdown of different revenue streams, because a lot of times like the companies will represent themselves as, oh, we're, doing this professional service, but then it's like all of your income is like you're just raising capital and staking it or whatever, which is, that's fine. It's a valid business model, but like, but
not if you're presenting yourself as being something else to investors and or the public. Yeah. What percent of companies that come to you looking for insurance do you insure versus what percent do you reject?
It depends on the line. We get so many random I used to be more involved in the cyber team. Now we have kind of like restructured our team. We have a cyber underwriter based out of Bermuda.
What is that? Isn't all of this cyber? We're in the digital asset space. What's not cyber? What's cyber? What's not cyber?
Yeah, no, great question as well. Cyber is like, it's like ransomware, or if you're storing data, like collecting data, and like that's more of a problem for, again, like an exchange or wallet provider, or even like if you have customers. I remember there was a Ledger leak a couple of years ago where it's like, it was thousands of names and home addresses were like dispersed to the public. Like that's like a data leak versus like decision making, I guess. Okay. But then there's also like, if you're like, it does all intersect as well, because it's like if you as a director like hired a certain third-party service provider that like you didn't vet, and then there was a cyber leak based on that, like you could still be held liable even though it's a cyber type of claim. So it's like we're always trying to like figure out how to structure those types of coverages.
So it varies whether you're talking about cyber or not in terms of what percent get.
Yeah, for sure. Because everybody,
is there like a rough number? Because my bet would be that a much higher percentage of insurance applicants in the crypto world would need to be rejected than in like the traditional insurance world, because I imagine there's just like a lot more kind of craziness or fraud or even accidental fraud or something happening in this space. Then again, the people who are committing fraud anywhere probably aren't looking for insurance, because on some level they must know that they're doing something.
Yeah, which is the problem. It's called
improprietous.
Yeah, in insurance, the term is adverse selection, which means like the people that are most likely to need insurance because they're like, oh, like maybe we should get insurance because we want to be protected, are the ones that are most likely to seek it out. So like that's how we're
they actually seek it out.
Yeah,
because that surprises me. I mean, it doesn't surprise me because obviously they need it, but it surprises just like the arrogance of being like
I know I'm doing something wrong, so I'm going to get insurance.
Yeah, exactly. Like my clients, my holders, my whatever are probably going to get screwed by me. So let me at least cover my ass with insurance.
Yeah. And that like applies across the insurance marketplace generally. Like if you're, I'm young and healthy, so maybe I won't buy health insurance or whatever.
But that makes sense because there's no, I mean, well, this is debatable, right? But it's like, if you have some sort of underlying condition or you're just older and therefore more likely to fall and break a hip or whatever, right? Like I don't fault you for that. If you are clearly running a mismanaged business, that is your fault. So the arrogance to feel like I'm going to submit all this stuff and like manage to get insurance, even though I'm clearly like, at a point of risk that's completely irresponsible. Like, I guess it's like the female brain in me or like the good girl brain in me that's like, I just would never do it in the first place. But then to like expose my books to other people, for other people to also realize what a fraud.
No, seriously.
Gives me such crippling anxiety to think about.
So sometimes we definitely get businesses, public and private, that were like these are absolutely just scams or fraudulent or raising retail capital in order to just invest in like the CEO's son's business or whatever. There's so many things like that.
Do you confront them? Like you're looking at these financials, you're looking at these things being like, oh my God, this person is so full of shit.
Oh yeah.
Do you just like send like a perfunctory, like, unfortunately, we can't cover you? Or are you like, sir, sit down, look at yourself in the mirror. Life is long. Don't ruin your reputation and the lives of others because daddy feels guilty for not being around more when your son was younger. Like, I don't know, whatever it is.
There's definitely, well, we like to say that every risk can be underwritten. So even it's like my favorite exclusion is the fraud exclusion. Like if there's a fraud, I'm still gonna, like, we can still give you a policy. There'll just be a fraud exclusion on it. Or if we know that there's blatant fraud or even something that like could be, I mean, we'll typically go back and ask questions. Like I love a pointed question. Like, please break down like you have a balance sheet line item of $15 million for company treats. Like, please break that down for me.
Is that an example?
Oh, absolutely.
Company treats.
Yeah.
Or like $15 million.
Ridiculous things like that.
It sounds like you're drawing from like a very specific example. What did company treats turn out being?
Oh, they didn't respond to the email. So that's the thing. Like that's part of the underwriting is we'll ask detailed questions. And then sometimes we just never hear from them again. And we're like, okay, like guess, if you weren't prepared to go through the underwriting process,
you're not prepared for insurance.
Yeah.
Oh my God. So yeah, no company treat exclusion, it sounds like. So it sounds like you don't often like reject people so much as they opt out of the process because they can't handle the heat. So they got to get out of the kitchen.
I mean, yeah, because if you as Overpriced LLC were coming to me for insurance, like I'm not talking to you directly. We're working through the insurance industry is functioning essentially the same way as it has for 300 years. And there's multiple layers of intermediaries in between us. So it's like a broker will call me and be like, Carly, like I'm getting pushed by Carly, like she really wants insurance. And I'll look at your thing and I'm like, wow, like Carly sure has a lot of company treat line items on her balance sheet. Like I'm going to send that in an email and then ask for her written response.
Overpriced JPEGs. I really love Smart Pop.
Yeah,
so
exactly.
Millions are being burned on my Snyder's pretzel and Smart Pop addiction. Okay, sorry. So finish breaking that down. You'll push back on the broker.
We'll push back on the broker and ask questions via email. And then sometimes the insured is like, I actually don't even want to go through this process. Like I was just shopping around and like, this seems like I actually don't need the coverage that bad. And then we're like, okay, like let us know when you're ready to re-engage. Because like our relationships are generally with the broker. So it's like, we always want to support them and like, they're just trying to get deals over the line. So of course, like when we're the ones retaining the risk, like we need to like obviously dig into that. But it's like, if we can structure a policy in a way, whether with endorsements or like, which is just where you like amend, like we have a base policy wording, but then we'll amend coverage or, we'll be like, okay, like, sure, we'll cover you, but only these specific directors. Like I've written exclusions where it's like, find one guy. And I'm like, okay, I'm excluding this one guy from the policy. It's really.
So what was an example in that scenario? What was the one guy doing that made you be like, yeah, this guy does not get coverage?
A well-known CEO that is, not openly unwilling to comply with regulations. And it's just like anyone in this space would maybe not want to like retain that kind of risk on balance sheet, but it's a great company,
So interesting. Okay. And do you ever, I'm assuming you're like under NDA or whatever when you look at any of you get to look at the inner workings of these companies. So you have to sign like ironclad agreements.
Yes.
Whatever. Do you ever feel bad or like have this pit in your stomach? Like I'm imagining if you're looking at some of these financials for companies and you're seeing publicly all sorts of retail investors dive in, put their money there, do whatever they're doing. And you are like laying in bed at night being like, oh my God, don't. Does that happen?
I mean, for sure, we definitely see and hear a lot of things across the space. I mean, I think like I came from investment banking, so it's like kind of the same type of just like I see the MNPI.
You're kind of just like asshole proof. You're like,
At this point, and I mean, especially in crypto, and this is why it's kind of like something I joke about on the team. I say that girls are like the best underwriters because it's just like you can see through. Like I see a guy and he's everyone else is like, wow, like that guy's so smart, like minimum premium. I'm like, like let's see like something beyond like a LinkedIn that says serial entrepreneur, founder and builder, you know, like let's see some real financials or whatever. But we've awesome
I need to see your dating profile to really get a sense of
that's the thing. Because I
how
was
many
new to
fish,
the
how big are the fish you're holding in your Tinder bot and your Tinder profile?
I was new to the insurance industry, but I think anybody that's like tried to date men is like you're just used to having
to read through a bunch of bravado and bullshit.
Oh, for sure.
It sounds like a lot of the follow-up questions that you ask are over email.
Yeah.
Are you ever on the phone with these potential clients, I suppose, or potential projects? Is there ever a little bit of satisfaction of like being sort of a young woman who's probably like a lot brighter or, killer than maybe the person on the other end of the call anticipates?
Oh, absolutely. I mean, when I first, again, like I came to Relm, I was the 5th employee, but I didn't know anything about the insurance industry. So our CEO would get on phone calls. Like when I first joined, we were kind of only doing phone calls and not really asking those questions over email. And I would just be like, they're trying to take notes. They thought I was like his assistant or whatever. And they're like, wait, like, what? Yeah, like, why is she talking? But then I think, one, I just like to have things in writing anyway.
Sure.
But like, it's like a lot of times like we'll get a submission for insurance. I'll look at it and I'll be like, okay, we need year-to-date financials. I want a breakdown of like this line item. And by the way, I saw this on Twitter, which, that doesn't check out with what I saw in the form. And the broker will come back and be like, the client wants to, schedule a call and talk through these issues. And I'm like, I'm happy to chat, but we're still going to have the same questions afterward. And like, I'm always thinking like in the event that there's a claim in a year from now, like I need to be able to defend why did we price coverage a certain way? Why did we even accept this client to begin with? And it's just like, I prefer to have like that kind of assurance in writing. And it also is just like, again, like it kind of turns off the scams a little bit. People are used to just being able to say, oh, like I want insurance, so I'm just going to buy it. And it's like,
no.
Nothing's guaranteed. And it's like, we are retaining that risk. And it's a real thing that we have to consider.
Totally. Have you seen a difference from the bear to the bull or bull to the bear in terms of number of companies, projects, whatever, coming to you guys for insurance? Like, has that hit your business? Or if anything, in the bear, people are professionalizing. And so, there's been no change.
Yeah, it's kind of both. Like when there was such an influx of money coming in from VCs, like, again, that's a big reason that people are spurred to get coverage is if you're taking outside capital. Typically, it's a requirement with VCs. Like if you're a venture-backed company, you need to have D&O insurance because the VC is like, I'm not going to just give you this with no strings attached, basically. So we did see, I think we've definitely seen consistent submission volume, but people are definitely less willing to pay premiums for it. Like there's insurance coverage is expensive and it's worth it when you need it, but that's the purpose of insurance, is that you're kind of hoping that you just pay the premium and don't actually have to use it because nobody wants to go through a lawsuit or, settle a claim.
If I was going to take out a $2 million policy for Overpriced LLC, for D&O insurance, let's say, what would I expect or what should I expect to pay?
You'll get the friends and family discount.
Yes, that's what I like to hear. Discount of my insurance needs.
No, it can really range. Like it's significantly more expensive than traditional insurance, but like we do try and price things fairly, and we'll look at like, what do your financials look like? Our minimum premiums, just like we're looking at like 15 to 20K per $1 million of coverage, but there's so many things.
Monthly?
No. Up for a year. Yeah.
Okay, so it's not like a monthly payment thing. It's like you pay some upfront. Got it.
Yeah, but like that
shows how much I know about insurance. I don't have a car. I don't think I have renter's insurance. Don't quote me on that. Maybe I do.
You're
like I'm like I have no idea how to do any of this stuff.
Well, renter's insurance, so Lemonade is just like a big, market for that. So the founder of Lemonade is actually on Relm's board, and like Joe knows him well, and like we, have worked closely with them.
Not to belabor this point, but going back to your point about VCs, that becomes like a big, impetus for folks to get D&O insurance because these VCs don't want to like invest in a company if they don't have that. I'm just trying to reconcile that with the fact that 5 years ago, you still had VCs backing some of these companies. Who was insuring them? like, I mean, I'm sure there's others. Relm can't be the literal only crypto insurer. So maybe just give me that competitive landscape. But like,
sure.
how are any of these folks raising money 4 or 5 years ago, without sort of like crypto insurance providers?
Yeah. So we're really the main licensed commercial insurer, but there's, again, like you can break down both of those things. We're also like, so Relm is domiciled in Bermuda, which is the second largest insurance and reinsurance jurisdiction in the world. They've really leaned into innovation in insurance. They've been like a great partner. The Bermuda Monetary Authority has been a great partner and a great place for like Relm to, grow and be able to develop these types of products. We have a license under the BMA called the Innovative Insurer General Business License, which allows us to hold crypto on our balance sheet, denominate like limits in crypto, pay claims in crypto, et cetera. So, but that was only introduced in 2018. I mean, prior to that, again, there's some companies that during bull markets also, and like we've seen this even in the past couple of months, like traditional insurers like will get in, but then there's a big hack, or there's, the New York Times article about that one guy like getting locked out of all of his Bitcoin, and it's just the headline versus actual risk. So there's certainly other like licensed commercial players in the space, but I think we have really differentiated ourselves, number one, as being able to, one, work with clients and brokers to tailor policies, and like we want to find a solution, like we want to help. And then two, our regulation and ability to like work with crypto companies. There's also obviously a major like decentralized insurance. Like I can, Nexus Mutual is like a big, like when I say I'm in crypto insurance, people are like, oh, do you work at Nexus? Like that's a decentralized on-chain insurance provider, which is like very sophisticated, and they are in the space. But we, as a licensed commercial provider, it's like there's so many ratings and financial stability and things that companies have to consider, and we make it easy for companies to work with us.
What does a decentralized insurance provider? It's
almost like a DAO where it's like you pay in, and then the DAO
will cover it.
Yeah.
It's like that. It's sort of got it.
Yeah.
Like you see those in, I think of like in developing countries where you'll have those sort of like saving pools almost for folks who like don't have traditional banking systems, right? Like the community will all be putting in sort of money on a regular basis. And then if somebody's in need because their crops, there's like damage to their crops or something, they'll be able to take it out of that collective because again, they don't have access to traditional financial services. Okay, that makes sense.
Yeah. And there's a whole range of like different protocols like that especially for retail, traders or investors just like looking to protect the value of like their assets. But like, again, like a major company they're not at a space where like they're going to be able to buy insurance from like someone without a license or like that financial stability guarantee.
So you mentioned you foresaw a lot of the contagion, collapses that essentially happen in this space. Not that you could have predicted them exactly the way they played out, but you anticipated which companies maybe like weren't financially sound. How do things look now? Is there a lot more pain to come? Or you're like, oh, there's shoes that have not dropped, my friends?
I think certainly we're seeing the ripple effects now. Some of the recent bankruptcy filings, like watching very closely as, every time a company files for bankruptcy, there's like 7 other companies that they owe like millions of dollars to. And then it's like, how are they gonna, work with that risk? And like, how is it gonna affect it's always interesting when our clients are working together and to watch that like kind of play out. But I think like the dust seems to have settled, hopefully, and like the market is stabilizing. So we'll see.
Are you seeing stronger sets of financials and stronger inner workings of companies now than you did 6-12 months ago? Yeah,
it's almost like a shakeout, right? It's like, the companies that were gonna go under and not do well have, and it's like the ones remaining, it's, people are building to stand the test of time, and that's also.
And even the new applications you're getting in, they're getting stronger, better? Are they better on average than maybe?
Yeah, I would say so. There's definitely, bear markets are for building, right?
Yeah.
So
the bull market's coming, guys, from the insurance person who sees all of the intercompanies. No, I'm kidding, of course. Putting words in your mouth. Beyond even just like financial stability, do you feel like you get a sense of trends that are coming down the pike?
Yeah.
Can you give us some?
Absolutely. It's like, I think specifically with NFTs, something that I know we've discussed is like opportunities for yield generation or NFTs as collateral. Like we're seeing a lot of companies like starting to like look into that and making those assets more useful, not even just, oh, if you buy this NFT, you're going to have a utility token that's going to be actually useful, or you can use this as a pass to get into some kind of space, real or virtual. But like actually being able to like unlock the liquidity and value of like that asset is something that like I'm definitely like watching closely and I'm excited about.
That's interesting. Is that, you mean you have companies that have NFTs in their balance sheets as part of their projections or models or whatever, saying, hey, we are going to, you know, lend these out or whatever, and, you know, unlock the liquidity within this NFT asset as part of our sort of financial models, or be able to kind of put it to productive use on like the company balance sheet side? Is that what you're seeing?
Yeah.
Wow.
For sure. I mean, I think like also like creator economy type of trends are certainly like people are really investing in.
What
like,
does that look like?
I mean, I think like digital communities, like decentralized communities are the future, and companies are certainly recognizing that and wanting to do, for example, like, you know, you doing like branded content for different like platforms is like, I think something like very powerful that like we're going to be seeing like a lot more of.
And what do you see that leads you to that?
Just like companies making investments in those in that space, or saying like a big part, like, because, you know, when we do get on the phone with these companies, like we love, you know, talking to them, hearing about what they're up to, and a big push is like in this market, finding new voices and new people that are gonna like kind of represent your brand in a way that like will connect differently to customers. I mean, we're seeing that almost as well with like the Starbucks NFT loyalty program.
So you're hearing, as part of like future plans for a lot of companies, like partnering with creators, how do we have kind of stronger creator networks for our project, company, et cetera? Is that?
For sure. I think creators, and also just like communities, Web3 loyalty. Like how do we unlock something like,
And is this from Web2 companies? Like how much do you work with just like native Web3 companies versus Web2 companies that are getting into crypto and saying, okay, if we're getting into crypto, we need to be super buttoned up and protected?
Yeah, that's a major thing that we see. Because again, like a lot of these companies, most companies have insurance with a crypto exclusion. So it's like, if you're a fund, like for example, a traditional fund, but you're like, actually, we now want to launch a new fund for stablecoin staking, like something so innocuous really as it gets into the crypto ecosystem. But they're like, we have insurance and we are happy with our coverage, but it has a crypto exclusion. So they'll ask us to sit above that, but then drop down for any crypto related claims. So it's almost like we're carving around the coverage that they currently have in order to just pick up the crypto exposure.
Wow.
Yeah.
And have you seen trends on that side? Like from the bull market to now, the ratio of natively Web3 companies coming to you for insurance versus Web2 companies coming? Has it changed since the merge? I mean, we're not that far post.
Yeah, we're not that far. Because that's the thing, the insurance industry also, like, you know, it moves a little slower. So it's if you started the process of looking for insurance now, like I might not look at your submission for 3 more weeks, because like a lot of times like companies have to go through, like if you're a Canadian company, you have to go through everyone in Canada first and like try and find coverage there in a domestic market and then come to here. So yeah, the trends are still evolving. I'm sure with the Starbucks announcement, again, as an example, but also some of the all of the buzz that we've seen around NFTs in the past year, every Web2 CMO is now being like, oh no, like what's our strategy? And I definitely think that it's something that like they're watching closely and probably developing. And I certainly expect to see more of that in the next couple of months.
COINSHIFT is a leading treasury management and infrastructure platform for DAOs and crypto businesses that need to manage their treasury operations. Every crypto org needs to manage its treasury, and COINSHIFT offers a simple, flexible, and efficient multi-chain treasury management platform built on top of the highly secure Gnosis Safe. With COINSHIFT, your organization can go from primitive single-chain treasury management to expressive, flexible, and multi-chain treasury features, such as global user management, global contacts, proposal management, and many other features that can be shared across an entire organization, allowing users to save time and reduce operational burdens and gas costs. COINSHIFT even has data tools like account reporting across the 7 chains on which it operates. Used by industry powerhouses such as Uniswap Grants, Balancer, Consensus, and Masari, COINSHIFT is speeding up the coordination and efficiency of the organizations that use it. You have to keep up with the frontier, and COINSHIFT makes that easy. So sign up at coinshift.xyz/bankless. Do you buy NFTs? Do you like playing in the profile picture games or searching for underpriced rares? Or you're part of an NFT community and you want that sweet social experience that your NFT brings you? Of course you want these things. It's why you're listening to this podcast, and it's also why you should check out SINTRA. SINTRA is the most powerful and friendly all-in-one time saver for NFT investors. A new social-fi investment app with real-time sales, floor price tracking, Twitter mentions, and 700,000 wallets, all available to check out. All infused into a social experience to connect you with other like-minded NFT investors. In Sintra, you can do your social media things like post, reply, share, ask questions, react, right next to where you showcase your beloved and cherished NFTs. And you also get a customizable feed of NFT activity, keeping you up to speed with the always changing meta of the NFT world. If you're not using Sintra, you're falling behind. So go to sintra.com/bankless and connect your wallet to enter the world of Sintra.
Is there anything we haven't covered that you're like, I want to make sure we explain this or talk about that?
I definitely think that just like, it's just been a really interesting ride. And like insurance, it's an opaque industry, and I came in with limited experience to say the least. And it's just been really interesting to understand like the way that the CEO kind of explained what we did to me when I met him. And I was just like, insurance like sounds boring. He was like, we're looking at these companies with the exact same level of diligence that a venture capitalist or an investor would undertake. But we're like, instead of giving them money, it's like, do we want to retain this risk on our balance sheet? And it's kind of a different question, right? Because there's many companies that we insure that I wouldn't necessarily invest in, especially as a Bitcoin maxi. but I'm comfortable, retaining risk on their behalf. So we'll see. Yeah, we'll see what happens.
Let's close talking about your Bitcoin maximalism. You say you're a Bitcoin maxi. I know you somewhat well now, or we've talked about it. We've never met in person. This is very fun.
I know.
Friendships are now born on the internet anyway. So, are you really a Bitcoin maxi? Like, you really don't believe in Ethereum, especially everything you're seeing with all the projects that are building on Ethereum or Polygon. Are you actually a Bitcoin maxi? And then the follow-up, of course,
asking
is like,
the hard
explain
questions.
It to me. Yeah.
Yeah. I mean,
we have an entire 45-minute conversation on like insurance and how to insure, but this is where it gets hard.
Yeah. No, I think. So again, my background is in investment banking. Like, I'm not a coder. I'm not like a developer by any means. I started my career in banking. The reason that I even got kind of interested in learning about Bitcoin was because during COVID, March 2020, when their markets are crashing literally to the point where they're turning off the circuit breakers so that like no one can trade. And then throughout kind of summer 2020, I'm just, there at my computer, like getting the police fix and like looking at it, I'm like, wow, like the stonk market is hitting high after high after high throughout summer of 2020. And I was like, what's going on here? And nobody at work could really like answer that question of like, why are markets rebounding?
And you were at Goldman?
Yes. Yeah. I started my career at Goldman Investment Banking. Stock market is supposed to be a reflection of investor confidence. And I don't know about you, but I was not feeling super confident in like the state of things summer 2020. So that's how I kind of like fell into the rabbit hole of like, what does it mean when the Fed is able to just print money endlessly, which is flowing into markets? Again, kind of, I think when it really clicked for me with like believing in Bitcoin as like a force for good was like understanding how like when they unleash like that amount of money and it flows into markets, that really entrenches inequality like within this country and globally, because it's like who already owns assets and like who has cash in the bank that's like melting away. So that was like very powerful for me when I realized that. And then separately, like I was Goldman analyst, like lowest of the low in terms of like on the deal
food
team.
chain, yeah.
Yeah. So, to get a deal over the line at an investment bank, it's conflict check and committee meeting and fill out this form. And every time there's, new regulation, it's like a patchwork of just different things that like is really kind of inefficient and leaves a lot of room for error / like that's why you're working that amount of hours is there's so many just steps. And I was like, there simply like has to be a better way. And they were like, well, there's not. Like, this is just how we do it. So like, get back to work. And I mean, I had a fantastic experience there, like really enjoyed working there. I ended up quitting during COVID after doing that job at home from a year. I mean, for a year, like it's really kind of an apprenticeship type of job. And trying to do it in isolation was certainly tough. But a big part of me wanting to get into a different sector within finance was seeing just the need for, once I understood Bitcoin, not even as just like a positive force, but as like a possible base layer, like consistent, impenetrable base layer of a new monetary system with like, that it's unchangeable in a way that like Ethereum, while there's so many cool things that can be built on it. And like, I'm not discounting that by any means. Like Bitcoin like solves like real problems that exist now.
Okay, to unpack a couple things there. I feel like the first part of the answer is like we're watching the Fed just pour all this money into the system, and it feels like you're getting at the inflation hedge argument. How do you respond to people who are like, oh, what do you know? Look, inflation's super high and Bitcoin crashed with everything else?
Absolutely. I mean, I think we're like really living through a time of just unprecedented, but aren't we always? I mean, I definitely really do believe in Bitcoin as like I believe that it will be like the global reserve currency within our lifetime, but like, I don't know if that means 5 years or 50 years. And it's like, my conviction is still strong, but I think it's important to like remain open-minded, and like there are problems or ways that the Bitcoin or its perception like can be improved. And again, like cool things are being built every day on these other protocols that are accruing tons of value, making a difference, like building communities. Like that's fantastic.
So is the argument partly like Bitcoin is still in such a nascent stage that it is still like a highly speculative instrument, that you have a lot of people who are trading it not based on fundamentals, but based on XYZ, whatever. But as education improves, as the younger generation who feels just more natively comfortable with digital assets gets older, it sort of will become more of an inflation hedge because people will more understand it fundamentally as such, and it'll be less of just like a speculative vehicle. Is that part of the thesis?
Yeah. I mean, I think like the difference between like Bitcoin and just crypto more broadly, at least to me, it's like Bitcoin is such a bigger idea, as in like it's the idea of separating money and government. Like we've never done that as a species, like being able to have a neutral, decentralized protocol where it's like the rules are decided not by institutions or, 7 Fed members that are controlling the monetary policy essentially for like the country and like beyond. But just code that never changes. Like it's that idea versus Ethereum is a base layer for, again, tons of cool things that are being built. But it's just like having worked in banking and having to get up at 6 a.m. to see 30 people on a phone call trying to like get a Fed wire across the line, like call me, like, okay, did you get the wire? Like checking the address 7 times, like, okay, wait, like, yeah, I got the test transaction. Like, okay, now send the real thing. Okay, like the deal's closed and it's 30 people on the phone. Like, I'm like, Bitcoin fixes this. And it's like, that's just the way that it's been done historically. So it's like, I think like solving like those problems that like we see in like the traditional finance sector. And like when I got to Relm, I really didn't have much exposure to the crypto ecosystem broadly, but like we work across the space on all of these different things, and like getting to see, again, trends, like what are people working on is really cool.
I guess that's always been one of my hesitations around Bitcoin is that separation of state and money, which I love as a citizen and as like a sort of like freedom wired person. I like always fall short of calling myself a libertarian because I'm very much not a libertarian, but like I have wirings that like resonate that way, or that lean that way. Isn't that the exact reason it won't work? Because it would have to be these politicians that like sort of allow for Bitcoin, or you're saying it can happen independent of whether or not the state allows for it?
Yeah, I think
that's
like
sort of the argument. It's just like people will gravitate there regardless.
Yeah, like you can ban Bitcoin in your country, but you're just banning like yourself from the Bitcoin network. Like it's TikTok next block. Like Bitcoin is just out there, doesn't care if who says they don't like it, or it's never going to change. And like that's within the Bitcoin community, people see efforts like the Greenpeace like changing the code, and it's like that will not happen.
What is that?
Oh, like because obviously a big concern.
I'm out of the Bitcoin community. I'm like not out, but like I don't know like the hip stuff happening in Bitcoin because I'm very much in my like not ETH Maxi, but like sort of ETH Maxi world. So keep
no, absolutely. I mean, I think like talk about headline versus like actual reality with the Bitcoin energy argument that Bitcoin uses so much energy and it's so bad for the environment, and it's like. It's really interesting because electric cars they're kind of touted as this like solution to the climate change debacle that we're in, and that uses it's basically the same thing. It's like cars charged by electricity versus money charged by electricity, and it's like it's just really interesting to see like the different like narratives around that. Yeah. But I don't. Oh, but like anyway.
Some Greenpeace.
I think it was like one of the founders of XRP or something like that was like donating money to Greenpeace to like as an effort to like clean up the code of Bitcoin. And they're like, oh, like the Bitcoin or like Bitcoin has not responded to this like press release or whatever. And it's like,
wait, so Greenpeace was saying Bitcoin hasn't responded to this press release?
Yeah.
And you're like, what the fuck do you mean? What does Bitcoin mean?
Exactly. And like there's no one that speaks for Bitcoin. And that's like what I love about the community or being able to find your voice in it is that like nobody has like the authority to say, like there's no founder being like, oh, like that's actually not what I meant. Like that's kind of the beauty of like having an anonymous founder that.
And for you, like because Ethereum has Vitalik, it doesn't quite have that same capacity. Though it would also be stupid if somebody said Ethereum did not respond to this press release. Like, sure, we have Vitalik, but it doesn't actually. He would even tell you he would never want to be like speaking for Ethereum in that sense. Like, you know,
of course, yeah. And he says Ethereum is neutral, which it is as a technology for sure. But just the fact that there was, or like that, like. It has changed over time is like, that's like the differentiator with Bitcoin, and people build on top of it, whether Lightning Network or kind of like leveraging the security with the Stacks ecosystem, which I'm also super excited about. And that's like kind of a divide too in like the Maxi community with Stacks as well.
What is that? Tell me.
It's like a, I guess I don't know if it's side chain or like what the exact phrase is. So I'll check, but leveraging the security of the Bitcoin network, and Stacks transactions are settled on that chain. But like, because it's a separate token, like that's part of because Bitcoin was like the initial mint or like mine was like actually decentralized versus like Ethereum. Obviously there was like, early insiders like.
Yeah, but it was small. Like if you look at the charts of like token allocation to insiders across whatever, all of the different chains, Ethereum is like, it was like 15% of initial like issuance or token allocation went to, like the early developers and miners. And you look at, there's some that are like 58% or like, like 60%. And have you been tracking the situation with helium at all?
I was just going to bring that up. Yeah, it's exactly.
Where it's like helium's like 90% of like the initial supply went to insiders or whatever it was, and or 75%. And like the founders being like, oh, that's totally normal. Like I've seen projects as much as like 90%. And the journalist is like, can you show me where? And he like sends a chart where like the upper bound is 58%, which still to me is wrong and too high, but like 90% and trying to justify it like with swagger, like that's appropriate or at all normal. Oh my God.
So exactly. And to bring it back to like from an insurance perspective, like you're making a representation that this is like the people's internet or the people's network or whatever they called it, that it's decentralized. And it's like the reality does not reflect that. So it's like, could there be a claim? Could there be a lawsuit related to this? Like probably. Yeah. So it's like it's representations versus like reality and like who's actually profiting.
Okay, so to close us out on a technical-ish question on the insurance side. So D&O insurance, that's primarily what you do. And so let's say helium, this is totally hypothetical, guys. Don't, nobody clip this and be like, information about helium. Hypothetically speaking, helium, let's say, has insurance, D&O insurance, gets sued, and let's say they have a $2 million policy. They get sued by an investor or by by whatever, a device holder.
A customer.
A customer, yeah. Saying, I don't even know the word for customer anymore. I know holders. I'm like, I'm too ingrained in this world. I'm like, what are those things where people and they buy a thing from you and they're not holders?
They're holding
else.
A router, right?
Yeah, exactly. Yeah, sure. So somebody sues because they're like, you completely misrepresented yourself, and the case has legs. At what point, like, is that when you pay out the $2 million and they just use it to cover their legal fees? Like, somebody has a policy and the worst case has happened and you actually have to pay out coverage. How does that work? Like what would be the thing that would happen that would say you would end up having to pay them out for?
Yeah, well, like as soon as they file a lawsuit or like as soon as the lawyers get involved, like we get noticed on the claim and then we see it in the inbox and like we're like, oh, like claim alert. And then we kind of just like wait for mediation to play out. Like typically like companies will try and settle because again, like nobody wants to go like get a court involved. Like nobody wants a full class action lawsuit. They'll just try and settle. And like if they end up settling above the deductible, like then like yes, we'll have to pay for that.
So you don't pay, got it. You won't pay for like the legal fees, so to speak.
No,
they will.
We will. Yeah, it'll all be like part of that. But it's like these claims can take like just because we're noticed on a claim, like it might be a year or 2 years, and then that like impacts like as an insurance company, we have to have reserves. So it's like when you get noticed on a claim like that, like we're calculating like, okay, what is the expected claims payout look like here? And like, how much money can we just put off to the side so that we know that like we're covered on our end? And like over time, if like it seems like, okay, like our lawyer or our claims representative is like, okay, like actually this case doesn't really have legs, or like they're going to settle, but it's going to be for $50K and the deductible
was $100K.
Yeah, then we're like, okay, like great.
Don't worry about it. Wow. So interesting, Sophia. Always fun to chat with you. I could go deeper on Bitcoin, but we won't do it today because we're at time.
Another time.
And the audience here probably is more ETH people anyway. But thank you so much for joining me. This is awesome.
Thank you so much for having me.
And time for us to just like hang out and have drinks tonight.
So excited.
Thank you so much for watching this episode of Overpriced JPEGs. If you liked this conversation, if you liked this episode, please go ahead and hit subscribe. It helps me out, it helps the show out, and it means you will get alerts and updates when we post new content. Thanks again.